Hi, a very good morning to you. It's a bright Monday morning after a long weekend. Not really bright because the clouds are overcast in Bombay and it's raining a bit. But thank you for being there. It's nice to have you once again. This is R. Bhaskar from BKBB, an acronym for Bhaskar Ki Business Baatein. And we bring you every week policy analysis, conversations, even an occasional business story. But right now, at 8:15 in the morning, we bring to you news behind the news. We look at titles that are very important that we think we should draw your attention to. And today, I have my co-panelists. There's Hussaina. Welcome, Hussaina. And there's Saloni. Welcome, Saloni. The three of us together are going to discuss the following titles that are given on your screen. The first is China begins to bail out India and become a foil to the US. Then there's a story where we talk about India has allowed FPI payouts to drain its coffers. And the third is about agro-processing. Finally, big investors may be coming in. And let's take the first story first. China, in a remarkable move, well-timed and very appropriate, announced that all pharma imports from India will now be duty-free. Okay, that's good news. But what makes this news absolutely strategic is that it comes immediately after the US decided to impose a 100% tariff on India's pharma. Most of India's pharma goes to USA. And it was 25% initially, then raised to 50% with penal duty, and now he's brought it to 100%. That would have crippled the Indian pharma sector. Effectively saying, we are banning your products in the US. And we didn't know what to do. And China came up and said, doesn't matter. We'll allow duty-free imports. China used to charge 30% import on Indian pharma products, outpricing them in the Chinese market. Now it's 0%. So India will be able to access a huge Chinese market, which is larger than the US market. And hopefully that will ease much of India's heartburn. Of course, let me clarify that this is only reduction of duties. We do not know if there are any banned pharmaceutical products. I say this because cancer drugs were not allowed in China, at least till some years ago. And so there's a roaring black market in cancer drugs. Chinese wanted Indian cancer drugs, and many Indians are persuaded to carry cancer drugs with them when they came to China. But the fact that China has opened up its market to India achieves two objectives. One, it tells the US you can't play this tariff game continually. And two, it also tells India, listen, China can open up the markets to many other areas. Let's have normal talks, let's have discussions, and let us ease relations between the two countries. It's helpful for both countries if we can work together and if we can grow together. Anyway, let's take the next story. And that is about Hussaina, where she talks about FPI outgoings.
Yes. So, in a development over the past year, India has recorded the highest foreign portfolio investor, which is FPI outflows in all of Asia, which is a staggering $27.3 billion. According to Bloomberg data, this marks the largest sell-off by FPIs in any Asian market, followed by South Korea at $9.5 billion and Indonesia and Malaysia at $5.6 billion each. Now, to put it in simple words, foreign portfolio investment or FPI involves investors holding financial assets such as stocks and bonds in another country to diversify their portfolios. So, unlike direct investments, FPIs generally don't confer management control over the assets. Increased inflows improve market liquidity and allow more efficient price discovery in stocks and bonds. However, foreign portfolio investors in India are withdrawing from Indian markets in 2025 due to a mix of global and domestic factors. So, sir, what triggered this exodus? As per Dr. V.K. Vijay Kumar, who is the chief investment strategist at Geojit Investments, he points out that FPIs have pulled out $21 billion from India over the last year, which is the highest outflow from any emerging market during this period. And this large withdrawal hasn't just hurt markets, it's also contributed to a 3.5% depreciation in the Indian rupee against the US dollar. And he highlights two key reasons. One is the elevated valuations in Indian equities compared to other markets, and second is the tepid earnings growth in Indian companies during the same period. But again, to put this would be just a one directional story because FPI activity in India has always followed a distinct phases or patterns. In quarter one of 2025, FPIs were net sellers. In quarter two, they turned into buyers. And now in quarter three, they've again turned net sellers, especially through July, August, and September. So, interestingly, the depreciation of the INR has also been a factor in this sell off, especially since currencies of other emerging markets like Brazil and Indonesia have actually increased against the dollar. However, so that with quarter three of FY26 earnings expected to improve and a strong momentum predicted for FY27, sectors like automobiles and white goods are already showing signs of revival, which is again attributed to lower GST rates and affordable credit. If this trend continues, earnings growth will likely pick up, rupee depreciation will stabilize, and that could bring back FPI interest. So while India is now leading in FPI outflows, experts believe that we may be near the bottom of this trend. What do you think, sir? Do you think FPI will flow in India back?
Well, Hussein, you're absolutely right. When the rupee depreciates and when it's finished depreciating, foreign investments begin because of the same dollar, you get so many more rupees and hence you can buy more equity. The trouble is that when you want to take the money out, if rupee depreciates again, it lowers the money that you can take out. But there's another angle to it. India has always been favorable towards investment, portfolio investments by foreigners. It's bent rules in such a way that foreign investors get an easier go than the Indian investors. And also remember that India promotes speculation. Remember the Jane Street episode? It came to be known then that almost 60% of global speculative trading in derivatives is from India, even though it accounts for just 4% of market capitalization. We've done things just to promote speculation to keep the market floating up. That weakens the rupee, that weakens the Indian economy, and finally, it causes inflation. Yes, FPI will come in again. They'll come in again because they can take back money once again. India should be concentrating on FDI, which is investment in India's projects and not FPI. Look at the GIFT City rules. Anyway, thank you very much, Hussaina. Excellent story, very useful. And that takes me to the third story on agro-processing. Saloni, could you come in?
Yes, sir. So the government has said that global and domestic companies have signed agreements to invest around rupees 1.02 lakh crore in India's food processing sector. The Ministry of Food Processing Industries said 26 companies, including Reliance, Coca-Cola India, Amul, Nestle India, Tata Consumer Products Limited, and Carlsberg India, signed memoranda of understanding, which is MOUs, with commitments spanning dairy, meat, poultry, packaged food, beverages, spices, condiments, confectionery, edible oils, fruits and vegetables, and ready-to-eat products. The ministry said that the MOUs are expected to generate direct employment for over 64,000 people and create indirect opportunities for more than 10 lakh individuals. Investments will be spread across various states of India. Sir, Reliance Consumer Products Limited signed a rupees 40,000 crore agreement with the ministry to set up integrated food manufacturing facilities nationwide. Three Coca-Cola bottlers in India committed rupees 25,760 crore, which is $2.96 billion, for greenfield and brownfield projects to expand food processing infrastructure. Sir, the ministry added that the Invest India assisted in facilitating these MOUs. Their statement said, the event has laid a strong foundation for sustainable growth, innovation, and international collaboration, further consolidating India's leadership in shaping the future of global food systems. So the ministry also stated that it would continue to collaborate closely with industry stakeholders to ensure the effective implementation of these investments. So what's your take on this?
Absolutely right. India needs foreign investments, especially in the agro-food processing industry. Why? Because food processing is one which will cause a value added in agriculture, so the contribution of agriculture to GDP will go up. But there's a second reason why. The second reason is that as food processing comes in, they take crops and process them throughout the year. So instead of fluctuating price of tomatoes, when there's additional production, prices crash. When there's not much production, prices increase. You have stable prices around the year because it's converted into purees, into other tomato products. And that's how food processing is crucial. But there's one more last benefit, and that is the farmer gets more money at the end of the day. And that actually can give India a big boost. At present, these investment plans are on paper. One hopes that these paper investment plans will actually materialize and change India's agriculture and its foreign exchange inward flow possibilities. Thanks, Susanna. Very useful. Good luck to you. And that takes me to the end of today's session. Comments and questions. But before I go to comments and questions, just a usual reminder. Please click the subscribe button if you have not clicked already. Click the like button. That helps us immensely. It helps us in algorithms with YouTube. And the last part, please tell all your friends about us, because that is one way in which we can grow faster. And that takes me to the comments that are coming in. And the first comment is that how long can India depend on China? There's no how long. You have to be prepared for every kind of situation. India's problem was that it kept on looking at the Western world and ignored the Eastern world. It kept on inventing ways in which one could justify not going there. It's changing now. And that's good. India should be interested in its own interests and not pursue ideological goals. And second part is that India should always work towards having a situation where you put your eggs in different baskets. If one basket says no, you still have other baskets. India had put all its eggs in the Western markets. It's now learning to diversify. And that's why the Chinese invitation of doing business with China is very, very, very helpful. And that takes me to the second question. And the second question is about FPI outflows. Why can't we encourage FPI? Why can't we encourage FPI investments, but don't make it very easy for them to make money in India? Because eventually we'll have to promote FDI. Yes, you're right. FDI is a more desirable investment because FDI is money that goes into creating capital and thus creating jobs. FPI is a trading account. It's a seasoning on a meal, which makes a meal taste better, but seasoning by itself has no nutritional value. Similarly, the core strength of a country is FDI. Our country is investing in a country to make certain goods and services that have an export value. Until the government does that, you will have a situation where Indians will have to go running around to countries. Will you tie up with me? The conditions put forth by the West are not so attractive now. The conditions being put forward by China are extremely favorable. So India will go towards China and possibly even become a friend of its. And that takes me to the last question. And the last question is on food processing. What kind of food processing offers a maximum bang for the buck? Ideally, it's fruits and vegetables. Because fruit, when packaged, gets a higher life lifespan, and also has a higher value added, hence gets more money for the business. After fruits and vegetables, you have other exotica. Grains come the last because grains are bulk commodities and there's not much variation. But anyway, that's the way it is. And that brings me to the end of today's comments. Thank you for sending in your comments, your questions. They help us. And yes, please have a wonderful day ahead. The week has just begun and may begin in a very cheerful way for you. Good luck to you. Take care.